Hello everyone, welcome to JMac Investing. My name is Jason. Recently we took a look at the best tech sector ETFs. Today we're going to take another step beyond tech sector, and we're going to look at the best growth in general regardless of sector. Stay tuned. So I hope everyone is doing well. Got a treat for you today. I've done my homework, done some research, and I've found 3, possibly 4 ETFs that blow the markets out of the water, outperforming, momentum building, mega growth ETFs. Sound too good to be true? Could be, but it's all about the current environment. And this current environment that we're in with COVID-19 and everything going on surrounding it, where everyone is focused on all businesses and the economy is geared towards a work from home, cloud-based approach, looking for technology and services to help continue to keep the economy afloat. So I found some ETFs that really have, and a couple of these are just long-term outperformers in general, and then there's one particular that is just going to thrive for the near-term future. So let's go ahead and get into it. The first one we'll take a look at is ticker symbol MTUM, iShares Edge MSCI Momentum Factor ETF. So the ticker symbol MTUM is a play on momentum. So I like this particular ETF. I mean, it's an outperformer for sure over the long term. Let's look at, so right now there's assets under management of 9.37 billion. So really, very popular ETF, no doubt. 52-week, 1-year performance. So it's obviously outperformed the market, which is still really down, 10 to 12%. Its 52-week performances plus almost 8%. And here's the all-time chart on it. And if we look, here's the reason I really like it. Okay, here's the top holdings. So these are all momentum plays. If you look, I mean, obviously most really good outperforming ETFs have Apple, Microsoft, and Amazon at the top. But then you have these healthcare ones because of the current environment. J&J, United Health, they're at the top of this list. You got Nvidia, Adobe, Google. Let's look at the whole holdings here. And one of the neat things is you'll see this is probably one of the highest, other than like the ARK ETF of Tesla, has a 2.43% weighting of Tesla, so it's in the top 10 or so. And then look, it's just a lot of healthcare, so it's really a lot of healthcare and a lot of tech, with a few outliers. If we go down the list, let's see. Yeah, but I mean, a lot of biotech, a lot of pharmaceuticals, a lot of ServiceNow, AMT, 5G, S&P Global, gaming, Activision Blizzard. You see, so these are all, there's 5G, T-Mobile. So it's just a momentum play on, here's more, Domino's Pizza. People are ordering pizza, right? So this is a fabulous ETF that focuses on a momentum index. So the momentum now is tech and healthcare. If that momentum shifts, this ETF would shift with whatever momentum was taking place. That's why I like this particular ETF. And if we go and take a peek, So if we look here at the performance of momentum over time of MTUM, you can see 1 year return 5.28, 3 years 13.47%, 5 years 12.8%, lifetime 14%, over 14%. So it has done quite well, and like I said, it is a great outperformer that stays with momentum's going on in the market. Okay, so that's our first ETF. Next up, let's take a look at, this is a new ETF, ticker symbol WCLD. It's a Wisdom Tree product, Wisdom Tree Cloud Computing Fund. Okay, so this is really new ETF. It is focused on the cloud computing. So this has, here you go. So if we look at the stated objective, this investment seeks to track price and yield performance before fees of the BVP NASDAQ Emerging Cloud Index. So that index, if we get into it, let's see, like I said, it hadn't been around very long, just since like September of 2019. So this ETF has not even been out for a full year. And this has a lot of companies that you may or may not have heard of. You may have heard of them, but you may not know what they do. It's one of those types of things. A lot of cloud-based companies have a business model that, if you're not directly involved into their business, it makes no sense, and it's hard to figure out what they actually do. But these are all mega growth companies, right? So a lot of them are small, up and coming, small in terms of in the tech space. So Fastly, Zoom, Twilio, Shopify, Datadog. Shopify obviously not small. These aren't small, but this is the top weighted part of it. We'll get down into, you'll see there's some smaller companies in it. Datadog, Wix.com, DocuSign, Okta, Five9, Zscaler, Everbridge, Cloudflare, Coupa Software, Team, which is one of my favorite companies, Atlassian Corporation, PayPal, Smartsheet, ServiceNow, Work, Slack Technologies, RingCentral, Pluralsight, Blackline, Adobe, Dropbox, Square, Salesforce, Paycom, Domo, Workday, Yext, Paylocity, and the last page, Anaplan, J2 Global, and Zora. So as you can see, so this particular ETF is just all of these cloud companies, cloud-based companies that are beginning to dominate the market. And if we switch over, here's the top 10 holdings again, so you can see their icons. Maybe that'll register for you. But you can see, so all information technology, 100%. So as I said, all we got is about 6 months worth of data, and year to date it's up 31%. 5 day up 5%. For 4 weeks it's up 24%. 6 month almost 30%. So they're just killing it. So lots of money has been made on this. I could see this ETF reaching $100 within a year or two, honestly, with the holdings that it has. So it's a mega growth play. I really like it. I like a lot of the companies in it, but they're just I just probably wouldn't want to buy them individually. I'd like to buy this basket of companies in this ETF. So I'm making this part of one of my portfolios for growth. Next up, we have a little bit different type of ETF, but one that blows the doors off of every other ETF I've seen. It's kind of one of these tricky ones, but let's take a look at it. It is Direction Russell 1000 Growth Overvalue ETF. Ticker symbol on it is RWGV. Now, this one is a little bit complex. It is what is considered an enhanced strategy ETF. So investment seeks, let's see, so it uses the Russell 1000 growth over value 150 net spread index. So what that means is this takes and goes 150% long on growth companies and goes 50% short or puts on value companies. So I think I was reading one site that said that growth has beat value for like 29 consecutive years. So if you believe that continues, then this play right here is incredible and would continue to beat in an unbelievable manner, because they have this exact inverse of this called value over growth, and that one has just been a dog. Its performance has been very, very terrible. But let's look at this one's performance. It's just unbelievable. Year to date up 14.67%, full week up 10.99%, 52 week 36% over 52 week. So the only two holdings it has is cash and IWF. And see, so they're long, top 5% long are Microsoft, Apple, Amazon, Google, and Facebook, and they're short Berkshire Hathaway, Johnson & Johnson, JB Morgan, Procter & Gamble, Intel, which I guess these fall into value, and these longs fall into growth. And the index sector weighting, so it's 56% IT, 18 consumer discretionary, 14 healthcare. So, and this is how it works. So growth stocks 150% make up 150% of the portfolio. At the value stocks, the negative 50%, they're using puts on. So that's where you get the over performance. The just mega growth comes from them being short value and then being long growth. So like I said, it's a little bit of a different type of ETF, and one that you would have to watch and be very careful. If the market changed and value began to be a better play, then you'd want to pull out of this ETF and not stay long into this ETF. So this is one you'd have to manage and kind of observe. So those are three that I think you would greatly outperform. I actually own the Momentum in my daughter's, in the custodial account I have for her in Fidelity, and it's been a great outperformer. So and just to recap, I have launched a new channel. That channel is going to have the Educated Investor Show, and any live streams I do, they'll be over on that channel. Please go and check that out, subscribe to it, because any live stream going forward, I'm going to do my last live stream on this channel on JMac Investing this Wednesday. Then the following week, the Educated Investor Show moves over to the new channel. So make sure you subscribe to that. Hit the notification bell on the new channel. And if you aren't subscribed to this channel, please do. And hit that like button. Till next time, guys. Deuces.